Bloomberg Audio Studios. Podcasts, radio, news. Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Samsung will produce AI chips for Tesla in Texas, a new multi-year deal worth $16.5 billion.
Plus, the US and EU agree on a deal that will see the bloc face 15% tariffs on most of its exports, including chips and cars.
And what to expect from the big tech earnings coming up with Microsoft, Meta, Apple, and Amazon all reporting this week.
That is a huge market capitalization that we watch out for in terms of those mega caps coming with earnings, Ed. We're on tenterhooks ahead of it. Look, we are fading some of the rally that we've seen in big tech today. We're still clinging on to gains. The NASDAQ 100 at a new record high. We're up 1/3%. But those rallies that we saw in Europe have faded completely. We're in the red as that 15% tariff looks ugly on the EU side of things. But you're digging into the micro stories today.
Yeah, Tesla and Samsung and this arrangement to make AI chips in Texas is driving markets. Tesla's gains have really accelerated, up 3.8, almost 4% overnight in Korea. Look at Samsung shares. It's for the AI 6 chip, the next generation of full self-driving silicon that goes into the vehicles. Samsung already does quite a lot with Tesla on prior generations, and at the same time, Tesla has some diversifying and some hedge with TSMC. But this is a big one, and Elon Musk has been talking about it on X, of course.
Funny that. But let's get the inside track with Peter Elstrom, who joins us now for more on this. This is a vote of confidence in Samsung's chip manufacturing when it had been losing market share, Peter.
Yeah, that's exactly right. Samsung, of course, makes a whole bunch of things, including smartphones. They've really made most of their profits, though, recently out of their semiconductor business. They're the leading maker of most memory chips out there. But they've been trying to build this foundry business so that they could compete with TSMC, compete for some of that high-margin business from the likes of NVIDIA and Apple. And now what they've got is really a marquee customer in Tesla, where they can point to them and say, hey, Tesla is trusting us with the ability to make their high-end chips, these AI 6 chips, as Ed was mentioning earlier, which is very important for their self-driving technology, which they hope to really bring on in force next year and the year after. So for Samsung, this is a big step forward. It is a decent amount of money, as we were talking about. It could increase their growth in the foundry business by about 10%. But probably more importantly than that is the strategic importance of being able to say they have this big marquee customer for the foundry business.
Bloomberg broke the story that it was Tesla that was this, at that time, unnamed marquee customer. And it was interesting because Elon Musk actually gave us a lot of detail on social, $16.5 billion over multiple years. But Musk seems to be indicating it's bigger than that. And also, Peter, he talks about why it's important that it's in Texas. He seems to be suggesting that his proximity to the fab means that Tesla can be involved in the engineering and the ramp, but that he himself can wander the lines himself.
Right, yeah. How many businesses can Elon Musk get involved in? Now apparently he's going to do semiconductors too. Yeah, it's quite interesting that he has said, he says that this deal allows him to be able to be personally involved, intimately involved, to be able to walk the lines and help with production. I don't know how much he knows exactly about semiconductor manufacturing, but you can imagine that having such an important customer there on premises is going to put some pressure on them to be able to build out quite quickly. Now, it's important to kind of step back here. Of course, the U.S. has been trying to rebuild their semiconductor industry for a number of years. We saw the Biden administration come out with the CHIPS Act that offered $39 billion in incentives. Samsung is one of the big beneficiaries here, and one of the reasons that they're expanding their capacity in Texas is specifically so that they can supply U.S. customers. They're going to skirt their way around the Trump tariffs if they're able to produce within the country, and Elon Musk will be able to go there to Texas to be able to try out some of these things and then use them in the self-driving technology. So it is a step forward for that CHIPS Act and that effort to kind of rebuild the domestic industry. TSMC and Intel are both also beneficiaries of that effort.
It is interesting, though, isn't it, that it is overseas manufacturers building in the U.S. that are able to make big tech win in terms of the chip supply chain. What surprised me was also how integral, of course, Samsung is once again to the Kospi. I think the Kospi, the South Korean index, is one of the best performers globally this year. SK Hynix has a lot to thank for it as well, though.
Right, yes. SK Hynix has jumped out ahead in the memory chips that are most used for AI, these HBM memory chips. They've actually gotten quite a bit of ahead of Samsung on that front, which is a bit of a blow to Samsung. But Samsung is making some progress, kind of climbing its way back, trying to get authorization to be able to sell those HBM chips to NVIDIA, which is the most important partner at this point. But your broader point, yes, it's really TSMC has been leading the way in advanced chip manufacturing. It gets that high margin business from NVIDIA and Apple right now and many other customers. There were many hopes within Washington that the next competitor in that foundry business would be Intel. They have not made that progress. We saw that last week in the earnings report and Lip Bhutan's questions about whether maybe he's going to pursue that foundry business. But we're seeing that Samsung is emerging as probably the strongest alternative to TSMC. Everybody in the industry wants some competition in that market. They don't want to just have TSMC making the most advanced chips in the industry. They want to have some alternatives, whether it's Samsung, whether it's Intel, whether it's somebody else.
Got a lot of questions about those alternatives. Bloomberg's Peter Elstrom, thank you very much. Let's dive into all of this with Michael Green, Chief Investment Strategist and Portfolio Manager at Simplify Asset Management, which has over $8 billion in assets under management. And it's interesting, I want to take advantage of the timing, Michael. Last time you were on, we were talking about Elon Musk alienating himself from both political parties, if you remember. Now, this is an example of a leading American company, an individual in Elon Musk, doing a big deal over multiple years with a foreign technology company to onshore industry in this country. What do you make of that and the economic opportunity it presents?
Well, I think this is actually the tension that exists, right? Onshoring into America, particularly bringing back high value added tech manufacturing like chips, that's not going to overly stress the labor force, that has relatively low employment levels, but a large fiscal impact and a large economic impact. This is fantastic, and it's exactly what we would hope to see under a Trump administration, raising the costs of companies doing business abroad and shipping stuff to the United States. How successful it's going to be, as was alluded to earlier, these are two companies that are both kind of struggling in their respective fields that have announced a major investment. Is it enough to bring both companies significantly higher? Clearly, the stock market thinks that it's helpful. I don't see how it's not, but it still is something that remains to be seen in terms of its long-term impact.
Of the contract manufacturers, we mentioned Samsung, TSMC, and Intel. Which do you like and why?
Well, the quick answer is that I'm a strategist. I don't spend as much time on the individual securities. It's very hard to argue with TSMC's overall technical lead in the space. They have managed to build an extraordinary business that has slowly taken out competitors like Intel and, for that matter, Samsung. They're all extremely capable. This is an industry with tremendous growth. But if you're putting bets on change, you have to look at companies like Samsung, et cetera, to undercut, or Tesla. The whole story effectively is that increased competition is coming for both TSMC and NVIDIA. I think that's probably the biggest takeaway on this.
Give us the broader context here then, as a strategist as well, Michael, as to how overexposed investors are writ large on the semiconductor space, semiconductor equipment more broadly. I'm looking at how Goldman at the moment is saying the US prime book is really heavily weighted and overexposed to that. And we've seen hedge funds in particular dial back ahead of earnings.
Yeah, you definitely have seen that. And one of the factors that we've seen in this rally as it has extended off of the April lows has been extraordinary retail participation and dramatic increase in the quantity of margin that is being utilized. And equally important, a dramatic decline in the quantity of short interest. That's really what's hitting the hedge fund positioning, because they tend to have that bias of being long the more quality-oriented names, short the shorted names. That's causing distress in the hedge fund space that I think is causing them to take all exposures down as compared to isolating to particular risk for those leading companies. I think most people anticipate that this earnings report, this earnings season is going to be relatively favorable, if for no other reason than the stocks are near all-time highs. That lowers the incentive to introduce special charges or anything else that you would classify. So I think most people are actually expecting a pretty good earnings season. It's just the market conditions are extraordinarily difficult for hedge funds right now.
They've got to be pretty perfect, these earnings, for us to live up to the hype in a way, Michael. But what's also so clear is that hedge funds have been underexposed to software, services. Does that change in the near term?
Well, I think ultimately that hedge funds are going to follow whatever is working. So if we continue to see underperformance in the high quality hardware space, or the impressive performance that we're seeing from cyclicals right now versus defensives, you will see hedge funds ultimately rotate because they are more interested in making money than they are in being right.
Oh, there's always the quandary. Michael Green from Simplify Asset Management putting it straight on where the focus has to lie for hedge funds right now. Coming up, we thank him and we move over to Victoria Espinel of the Business Software Alliance, just talking about how software has been a bit unloved. But where are we going to be seeing the differences in regulations across the globe? How is that impacting software companies and the approach to AI? This is Bloomberg Tech.
So I just want to congratulate you. I think it's great that we made a deal today instead of playing games and maybe not making a deal at all. I think it's, I'm going to let you say, but I think it's the biggest deal ever made.
That was President Trump there speaking in Scotland. Many of the details from the US-EU trade deal are still to be announced. The semiconductor industry, though, rallying on the news that it will not face a separate tariff rate. Instead, it will be included in the 15% rate applied to all EU goods exported to the United States. I want to get out to Washington, D.C. and Bloomberg's Kaylee Lyons. Give us the details of what we do know, what was agreed. And the president saying there it's the best deal he's ever done.
Yeah, the biggest deal ever made, to use the president's words, Ed. I'll leave that up to determination as to whether or not that is actually true. But of course, this is a big win for Europe, which was facing the threat of a 30% tariff come Friday, August 1st, if this deal was not struck. 15%, obviously a much lower rate than that. And key here is really the fact that they got that 15% rate to apply to sectors in particular, not just automobiles, but as you mentioned, also semiconductors and pharmaceutical tariffs, which of course there is a Section 232 investigation underway into both of those sectors already, in which the end result could be that other non-EU countries face a higher tariff rate than that on those specific materials. Europe was able to secure a 15% rate that will be applicable effectively across the board, with the exception still of steel and aluminum, which of course faces a 50% tariff. Key to doing so, we understand, though no details are yet on paper. We haven't actually gotten a formal readout or full list of what this deal actually will entail beyond what we've been told and what officials familiar have told Bloomberg. But the key, according to sources familiar with the matter, was the fact that Europe has also agreed to make more investment into the United States as part of this deal, including $600 billion in investments into the U.S. and $750 billion of purchases of American energy over the course of the next several years, in addition to what President Trump described as vast purchases of U.S. military equipment. So all of that is what we understand this deal to essentially look like in the broadest of terms, but we're still waiting for that granular detail.
And of course, we assume and understand that there's a carve out for chip equipment in particular, where they face a zero tariffs, and no wonder ASML is on the higher side, Kaylee. What's really interesting is pushing us forward is what this 15% number means for the China negotiations. That's actually happening in Sweden, we understand.
Yeah, they're underway in Sweden right now. It will be 2 days of talks spearheaded by Chinese Premier Li Feng, as well as the Treasury Secretary Scott Bessent. They are underway. China, of course, already is facing a higher tariff rate than most. 20% is the level specifically applied in retaliation for the trade of fentanyl. That is going to be something specifically that we understand is one of the focuses of the U.S. at these talks. They're going to be talking about whether or not China is actually able to tamp down on the flow of fentanyl out of the country, though China obviously disputes that, saying it's a U.S. domestic problem. But in addition to trying to get that tariff rate lower, which there may or may not be progress on, the real crux of these talks, as has been for the previous iterations of this, as we've seen multiple rounds in the last several months, is going to be around export controls. On the U.S. side, of course, that includes export controls of critical technology, including semiconductor and equipment for the manufacturing of that. We've already seen some easing of that with the allowance of H20 chips from NVIDIA to start flowing back into China for export. But on the Chinese side, it's really about rare earths and critical minerals that, of course, they have a chokehold on at this time, and it has been the easing of the flow of that, allowing American importers to get the licenses to actually bring those critical minerals in. That has been critical for advancing this at least detente, shall we say, forward, which is also going to be one of the key pushes for these talks. The Treasury Secretary, Scott Bessent, indicating one of the primary outcomes they're looking for here is an extension of the current truce that is in place beyond the deadline that currently stands of August 12th.
Been important for NVIDIA's H20s as well to get back into China. Bloomberg's Kayleigh Lyons, brilliant wrap-up of all things trade. But let's get more on how these deals and indeed developing global regulations for artificial intelligence are really impacting developers. Victoria Espinel's with us, CEO of the Business Software Alliance. And the context here, Victoria, is one of the AI action plan announced by the US government really to take on China and the AI race that the US wants to win. From a regulatory perspective, how do you think the US is winning or not?
So I think there's a lot of good that's in the AI action plan. But here is one part, there's a lot of conversation about who's going to win the AI race. And a lot of that focus is on who's going to be at the cutting edge of innovation. And that is obviously important. But a conversation that is just starting to happen that I think will potentially have an even bigger impact is who is going to win the race on AI adoption. By that I mean, which are the countries that are going to figure out how to use AI best? Because it is those countries that are going to see the biggest economic benefit from AI. That is the race, and that is largely up for grabs right now. I think the United States has an advantage there, and I think the AI action plan has a number of aspects that are focused on adoption. But that race is up for grabs, and I think that is going to be a big indicator of where we see the biggest economic benefit over the next decade.
So enough focus, therefore, from your perspective, on AI adoption, on training talent to ensure that in enterprise we're actually getting bang for our buck, productivity actually goes up and to the right?
So there are a few aspects that I think are critical to AI adoption. And actually at BSA, we released an agenda just before the AI action plan came out earlier last week that focuses on three aspects. One is talent and workforce, and that is critical. I think there's no aspect more essential. The second is infrastructure and data. And the third is the governance framework and making sure that we get that right. And those three elements are things that the United States, but governments around the world, need to be figuring out right now if they are going to win the race on AI adoption.
Victoria, last week on the program, Michael Kratsios, who leads the Office of Science and Tech at the White House, came on and he talked about packages, that he sees America being a net exporter of everything in the stack, from hardware through to the models themselves. You were talking about adoption a moment ago. How does America as an exporter of AI fit into that?
I think that's a critical piece. So a lot of the innovation is happening here in the United States. For governments to be able to adopt AI, to have their private sector using AI in a way that they get the most economic benefit, a big piece of that is going to be AI exportation from the United States. And there was conversation last week about the data centers and the chips, but obviously an important element of that is the software and the cloud services, because it is literally not possible to adopt AI unless you have cutting-edge cloud services, unless you have cutting-edge software. And a lot of that's going to be coming from right here in the United States.
There was also a discussion about copyright, and the president talked about this during his address. Given that you kind of represent more the software side of the stack, how did you think about that? Kara and I, it increasingly comes up in the show as a point of priority, particularly for the frontier model or just model makers generally.
It's a big issue. It's an issue here in the United States and in other markets as well. So as you know, in the AI action plan that was released last week, there's not a lot of discussion of the copyright issue specifically, but the president in his public remarks spoke to it quite forcefully in terms of the importance of training data and for the AI LLM builders to be able to get that training data and use it with relative ease. So he was very, very clear on that aspect, and that's something that we are anticipating seeing the White House say more about in the next year or so. But the president was very clear in terms of his opinion on the importance of training data and how important that is for the United States to stay ahead of the AI race with respect to China.
Briefly, Victoria, today's a day we focus on the EU. It's smarting today in terms of competitiveness. They're worried about a 15% tariff. How much should they be worried about their own EU AI Act on competitiveness?
So again, I think the EU has huge potential opportunity to benefit from AI if it starts focusing on adoption. And part of that is addressing some of the digital sovereignty barriers that the EU has put up. There are aspects of the trade deal, as you know, the details of the trade deal are not yet fully public, but Ambassador Greer was talking just this morning about looking at things like mutual recognition of cybersecurity, of streamlining regulations, of steps that Europe can take. And those steps are important not just for U.S. software providers, but for the EU if they are going to be able to adopt and use AI effectively.
Victoria Espinel, CEO of the Business Software Alliance, thank you very much. We have some breaking news crossing the Bloomberg terminal. Figma is boosting the pricing of its IPO to $30 to $32 a share. It had previously seen the IPO at $25 to $28 per share. Remember, Figma is trying to raise just above $1 billion, and they had this kind of auction-style process where they went to prospective investors and said, how many shares do you want and how would you price them? The logic being, Caro, that they want to try and get near to that $20 billion valuation that Adobe had valued the company at when it tried to buy it. Now the IPO, which we think will price on Wednesday, to recap, pricing between $30 and $32 a share. We'll keep a close eye on it throughout the week.
And that previously marketed range had it at a market cap of about $16 billion at the top end. So we do the math. Coming up, AI competition sees the rapid releases of free open source models. More on that next. This is Bloomberg Tech. It is time now for Talking Tech, and first up, OpenAI rival Zhipu has released its biggest open source models to date. Now, the Chinese startup unveiled hybrid reasoning models, GLM 4.5, GLM 4.5 Air. It's the latest update to the company's flagship models as it joins a growing number of Chinese firms ramping up free AI offerings. Plus, PayPal, well, it's set to allow businesses to accept crypto at checkout. Over the coming weeks, the company will introduce more than 100 cryptocurrencies like Bitcoin and Ethereum as payment options for merchants. According to PayPal, the pay with crypto transactions settle instantly, will initially cost 0.99% per transaction. And TDK, one of the biggest suppliers of iPhone batteries, says it is closely monitoring the tariff impact globally due to their worldwide operations and the importance of relative tariffs compared to other countries. And the TDK CEO spoke exclusively to Bloomberg about how the company is seeing the trade deal between the US and Japan.
We'll need to keep monitoring the other cases, not only limited to here in Japan, but also the other countries. I hope that the impact, right, is going to be minimized, but it's actually out of our control.
The TDK CEO there. Now coming up, tech IPOs could be making a comeback. We speak with Matt Whiteiler of Wellington Management on the landscape for going public, a conversation that you do not want to miss. That's right next. This is Bloomberg Tech.
Welcome back to Bloomberg Tech. A quick check-in on these markets that are still at record highs when you think about the Nasdaq 100, but we are fading this rally a little bit, up 0.3%. We've got $11 trillion worth of market capitalizations on deck this week in terms of earnings. We've also got a lot of micro data, not to mention trade. Remember, August 1st, end of this week, is that so-called deadline for the tariffs, and we get some clarity on tariffs with the EU. 15%. Germany, it's smarting. It's feeling that's anti-competitive to some of its key industries. We're off by 0.25%. But dig into some of the details and the individual movers. I want to shine a light that the market capitalization of NVIDIA is once again climbing above that $4 trillion level, and it was a key contributor to the upside of these benchmarks. Tesla, too, in terms of points, up 3.6%. $16.5 billion deal to make chips via Samsung in Texas. The AI6 chip is on deck, and that is both emboldening Tesla investors as well as Samsung today. For ASML, up 2.5%. Key semiconductor equipment maker, there's a carve-out. 0% tariffs for these sorts of parts of the chip sector. And we also get clarity that, look, semiconductors will face that 15% tariff for the time being, Ed.
On a Monday morning, sometimes you just got to look at the calendar and just say, all right, what am I in for this week? Well, investors are bracing for a busy week of tech earnings with Microsoft, Meta, Apple and Amazon all reporting. in a 48-hour, 24-hour period. Bloomberg's Carmen Rienke is with us. And Carmen, I have to congratulate you as well, because it's one of the best headlines I've seen on the Bloomberg terminal. S&P 500 rally faces $11 trillion gauntlet of big tech earnings. The headline tells us the story, but we're braced for a very, very concentrated and busy period.
Yeah, it's true. So we have Wednesday and Thursday are the big days this week. And honestly, we're going to see a little bit of the bifurcation, I think, that we've seen in the Mag 7 this year really play out this week. So on Wednesday, we have Microsoft and Meta, which have been two of the biggest point leaders on the S&P and really driven the rally, especially from sort of that April trough that we saw. Those are going to report on Wednesday. And then on Thursday, we have Apple and Amazon. And these two companies have been under a little bit more scrutiny. Investors aren't quite as sure. Amazon, I think, is about flat on the year. Well, Apple stock has rallied a lot from April. It's down about 15% year to date. So people will really be watching to see, especially what they say about AI, what their plan is for using artificial intelligence going forward, and also what the impact is with China. They are the company that has the most exposure, especially out of the Magnificent Seven.
So can you comment, detail a little bit of how investors are going into this week? We know that hedge funds have actually been dialing back some of their exposure to some of the big tech names because they have been such winners and because valuations are so high. Have we seen a little bit of more caution coming into this?
I think so. I mean, the bar is set so incredibly high. And something that's interesting is that earnings expectations have actually come in a little bit for this group of companies from the last report. I think they're expected to deliver earnings growth of about 16% quarter over quarter, down from 19%. So there is a little bit of a lower bar in terms of like clearing it, but that makes it all the more important that these companies do beat and raise, especially to extend the rally in their stocks. They really have to prove that they can deliver and that their valuations are worth, paying for. As you said, they're very stretched. Some of these companies are at or near all-time highs. But we also have a second group of companies that are not. Like I just said, Apple, is still 15% off its all-time high. Amazon is off its record high. Those companies also, though, have to deliver, and they could be really important to extending the rally in the S&P. Apple is one of the biggest companies in the index. And so if it, think about where we could be if it were to pick back up and sort of see a reinvigoration in its stock. So people are definitely really watching the earnings this week. And I think just there is a very high bar, as always, for these companies.
Carmen, just give me a little bit more on those latter points. There's two charts in the story about the points contribution of the key names to the upside and the downside, which I think is a beautiful illustration of the story, but also profit estimates Mag 7 stripped out from the S&P 500. Mm-hmm. That just sets a really high bar. Like, what if it all goes wrong for Microsoft later in the week? Then at the index level, we're going to have some, let's call it turmoil.
Yeah, definitely. I mean, we know that these companies are the heaviest weighted. They are the biggest point gainers. So Microsoft and Meta, I think, are 2 and 3, NVIDIA being number 1. So, of course, there could be huge ramifications if these companies don't deliver. We've also seen from last week with Alphabet and Tesla that companies that do beat and raise are getting rewarded. They're seeing their shares go up, while companies that don't are getting punished by investors. They're, selling off. So it's super important going forward, and it'll be really interesting to see how it plays out.
Carmen Rienke, we thank you so much. A week to brace ourselves for. Let's just stick with the public markets. Let's talk about a potential newcomer. All eyes are on Figma going public this week. Figma now seeing its IPO pricing between $30 to $32 a share, increasing the size of its offering to about $1.2 billion and a fully diluted value of as much as roughly $18 billion. So, a tech IPO is coming back. Let's discuss it with Matt Wiethaler, who leads late-stage growth at Wellington Management, which has got a cool $1.3 trillion in assets under management. Part of that is private, and that is under your remit. Matt, are we going to see the windows crack open broader? Because you sat here in August of 2024, and we were hoping the same thing.
We were hoping that, and I think where we sit today is the VC-backed IPOs are coming, and you see it in Figma. And I think it's because we really had 3 conditions met in the past year. The first one was we had stability in interest rates. That kind of started at the end of last year when the Fed said that they're not going to raise anymore, started to cut, and now forecasting to cut some more. So first thing was rate stability. I think the second thing that we got was we had a public market that is relatively stable.
And at records.
Yeah, all at records, and with a VIX that's at a 12-month low almost. So stability in the public markets despite the bump in April. And I think the third piece that we had was we had companies actually go out successfully. We had Circle, we had CoreWeave, both those are up big. And we also had smaller companies like eToro and Omada Health that performed very well in the public markets. And so those three conditions, I think, set up for a really exciting back half of this year.
A lot of those had flavors of regulatory tailwinds when I think of crypto, or the AI trade that just keeps on being a winning formula. Do you need those within the portfolio companies to go public, or do you just need to be profitable, revenue generating?
I think you need to benefit from some of those trends that you mentioned before. I mean, I'd point to Figma, which, as you just discussed, raised its range. It's not a pure AI play by any means, but does and will leverage AI and its capabilities. And I think that helps promote and will help pricing of these companies as they go out.
Matt, it's really great to have you back on the program. We were just reflecting on the mechanism that Figma's using. We're calling it an auction-like mechanism where they go to prospective investors and they say, well, how many shares do you want to buy and what price would you set? Which I'm not as familiar with, but if you are like a late-stage growth investor, right, you're almost like an anchor investor going into some of these companies pre-IPO. How do you respond to the auction, so to speak?
Well, I think you have to respond to where the market is setting the price. And I think that in today's environment with, as we discussed, a market backdrop that is kind of at all-time highs, the response that the collective group will make, I think, is such that it will continue to raise pricing expectations for high-profile companies that are benefiting from AI to some degree, like Figma.
I called you an almost like anchor investor. When Wellington's name comes up in my world, it's kind of like that late stage that's pre-IPO. Is that your strategy, Matt?
That's right. Let's find the next generation of great public companies and invest in them while they're private, because these companies 20 or 30 years ago, companies like Figma would have been public. They would have gone public at $1 billion of market cap and grown to the $18 billion that they're now raising their expected market cap to, and done that in the public markets, not in the private markets. But if you look at how the market's changed, the market has changed such that these companies are staying private longer, not foregoing an IPO, just delaying the IPO. And that's the role that we can play, is to help those companies go from great private companies to great public companies.
I mean, Klarna, we all still wait and we watch, and that's in your portfolio business. But what I'm really interested in is, as a late stage investor, what are the metrics now? Because these companies fueled by AI are growing at such a rapid rate that suddenly they're already 100 million ARR generating in but a few quarters. What meets your criteria?
I think it's a great question, and something we talk about a lot, because as you point out, AI is just fueling so much revenue growth at unprecedented pace. You think about a company in the model space like Anthropic, they're rumored to have gone from $1 billion of ARR to $4 billion of ARR in 6 months. So 4xing their business at scale. So what do we look for? We are really focused on companies in the AI space that we think can be both durable and defensible. So durable meaning, can these companies be ongoing businesses, not in 6 or 12 months from now, but in 5 or 6 or 10 years from now? And then defensible, can they build on top of something that is not easily copyable?
Right. And then I think of DataIQ, Glean, Vanta, some of the rounds you have recently led. A lot of it's in the enterprise. Is that really the sweet spot at the moment, how we bring generative AI productivity into enterprise rather than consumer for you?
I think that is a really key observation, which is, how does the enterprise software stack benefit from AI and really leverage AI?
Matt Withheiler of Wellington Management. It's really good to have you back on Bloomberg Tech. Really appreciate it. Now, coming up on the program, we're going to hear from Alibaba Cloud founder Wang Jian as the company navigates a global AI talent war. You don't want to miss that one. This is Bloomberg Tech.
Now, Ed, over the weekend, did you see it? China hosting the World AI Conference in Shanghai. Look, we've got to show our audience. Robotics front and center. Some of them boxing like we see here, some of them pretty messily dispensing drinks. They're even playing the piano. But Ed, like, you're the person sitting down there with some of the leading robotics and humanoid makers here in the US. And it's interesting that in the story, they're really articulating the US isn't there with a cost-effective competitor right now.
But with this event in China, right, there's the bit that's for show. It's just like CES or GTC where you put all of this cool tech in one place. But the forecasts are that this is going to be an industry in the trillions of dollars by 2050, 2030, whatever. The skepticism in the story, which I really appreciate, is like how much of this is translatable to the real world. But China, as we keep hearing from Jensen Huang and everyone else, has leading researchers in the field of AI and an amazing supply chain for robotics because they can control it domestically. That seems to be a big theme.
It is, and I'm shame we didn't get too many backflipping dogs in that video for you in some of those pictures, but apparently they were there.
Yeah, the robots are coming. The battle for AI talent is creating huge pay packages as Silicon Valley and Beijing battle for AI dominance. Bloomberg's Annabelle Druler spoke exclusively with Alibaba cloud founder Wang Jian on the global AI talent war.
I don't think it's the, let's see, it's a typical way of doing things. Okay, I would say that. The reason is very simple. You know, with our own example, when I started the Alibaba Cloud, you know, the first thing I did, that was in 2008. The first I did was visit the Silicon Valley and to try to get talent. Okay, and after talking to all the people, and you realize actually we don't have much talent there because it's new.
Okay.
So. And also with some of the talent, it's just too expensive, okay? And too expensive basically means, okay, you don't know whether the cloud business is there. Why need to hire these people? So it's really about the innovation. So when you are in the early stage of innovation, I don't think talent is a problem. Because the only thing you need to do is to get the right person. Not really the expensive person, because if the new business, if it's true innovation, that basically means it's talent. Nobody care about them. Okay, otherwise we're going to working on that. So for today, what happened for the Meta is because they are very much focused on the existing success of the business and existing establishment of technology. That's my view. Okay. So I think we have a tremendous opportunity to look at technology nobody knows today. And these are talent. But these are, I can't say it's cheap, but it's available for you, okay? So that's really about the vision, where you want to go. And there's a lot of similar things, happened during the last 20 years also. Whenever everybody knows that these are talent, and it's better for you not to get in. And at least that's not new. That's my so like personally that I hired Zhou Jin. Now he's the leader for the Queen. Okay, you probably met him, when you were in Hangzhou. I personally interviewed him. 15 years ago, and we got talent. Now he's leading the Queen. Yeah. But
there's not really any justification, then it sounds like you think for such salaries.
That's not what I'm sorry. What happened in Silicon Valley is not the winning formula. That's what I believe. Yeah.
Alibaba cloud founder Wang Jian there speaking with Bloomberg's Annabelle Druler. And let's stay on those rather expensive AI hires happening at Meta. It is named Shengjie Zhao, its chief scientist for its new superintelligence AI group. Zhao joined Meta in June from OpenAI. For more, let's bring in Kurt Wagner. And let's just go through the leadership here, because there's Alexander Wang of Scale AI, then there's a chief scientist, and Jan LeCun is somewhere as well.
Yeah, that's right. It's been a total reorg, Caroline, in the last couple of months. So there's obviously Mark Zuckerberg at the top, and I do mention him specifically because he's incredibly hands-on with it when it comes to Meta's AI-related projects. Alexander Wang, the Scale AI co-founder, who they just sort of brought over in June after that massive investment they made in Scale AI. Shengjia Zhao, you just mentioned, is the new chief scientist of the Superintelligence Labs. Basically, that's the group internally that's going to, hopefully, for Meta, develop this new model that will be super intelligent, right? That will achieve that human level capability. And then Yann LeCun is still at Meta. He is still a chief scientist by title as well. He is running the FAIR group, which is the AI research division of Meta. They were very clear over the weekend and on Friday that LeCun is still there, still doing the research for Meta.
I'm grateful you talked about Zuckerberg's role, right? This announcement at the end of last week was on his social media platforms and channels personally. Do we know if the team is finished? Like, have the Avengers been assembled and they're done now, or are they still out there in the marketplace trying to find more people?
I believe they're still hiring. When we originally broke this story back in June that the superintelligence group was being brought together, we had heard that there were going to be around 50 people was the target. I've been keeping a spreadsheet, Ed. I'm up to like 30 or so. So, you know, we're maybe a little over halfway done. But I do think clearly they're at a point where they feel that they have a large enough group that they can start talking about this publicly, start talking about the chief scientist, things like that. But I don't think we're necessarily at the end of the road for hiring. I would think they would hire, you know, no matter how many people they get, if they're getting good people. I think Mark Zuckerberg has made clear this is a collection of talent, and I'm not sure that he's going to simply be like, oh, we've hit 50, therefore we're going to say no to other good people. I'm sure they'll bring as many good people in the door as they can.
We're actually about to talk a little bit more about earnings, and lots of investors thinking that the cost of talent is going to be something that comes up. Bloomberg's Kurt Wagner, great reporting. Thank you very much. Now, coming up, what to expect from the big tech earnings that are coming up later this week. There are many of them. They're important. We'll be right back. This is Bloomberg Tech. Let's get back to the big week of tech earnings ahead, and here to talk about what to expect, Bloomberg's Ryan Vlaselica. And across the equities team, we've done a lot on the terminal this morning to get us ready for the week. Let's just start with the calendar. What's coming our way over the next 4 or 5 days?
Hey, thanks for having me. So we have 4 real highlights coming out this week. We have Microsoft, we have Meta, followed by Apple and Amazon on Thursday. So 4 of the Magnificent 7 following Alphabet and Tesla last week. So obviously just a huge week for earnings. We're going to get a lot of detail about AI, about growth rates. We're going to get some more insight into the impact of tariffs. There's going to be a lot going on this week.
There is, and I'm wondering how analysts and investors alike have set themselves up for what ultimately has to be perfection, it feels like, if you're Alphabet or Tesla or anything to read across from.
So I would say that when it comes to Microsoft and Meta, both of these companies have been performing extremely well this year. And these are 2 companies that are really seen as being at the cutting edge of AI, and among the companies that are showing among the early benefits in terms of an ROI on all their AI spending. Now, we're going to be also looking to see how much these companies are spending going forward. Their CapEx plans are going to be a real focus this week. Last week, we did see Alphabet come out and really increase its CapEx target. Market seemed pretty okay with that, suggesting that if they're able to justify this level of spending, they're not going to get dinged by that. So that's a real focus for Meta and Microsoft, which I believe both report on Wednesday.
You also have a street wrap on the terminal about the sell-side sentiment toward Apple. How is the feeling right now about the iPhone maker ahead of later this week?
Yeah, so Apple is the one where I'd say the sentiment is by far the most negative. There are sort of a lot of headwinds that are being stacked up against it. It does not really have a strong AI strategy or product. It faces the most exposure to tariff-related issues. It hasn't been growing, certainly not at the pace of some of its big tech peers for quite an extended period of time. And the valuation is still on the higher end of things, especially relative to companies that are growing much faster. So certainly the picture there is a lot more cautious. I guess the flip side of this is maybe it's a lower bar, maybe expectations are so low that they're able to kind of jump over that, but that's one that I think there are a lot of question marks on this quarter.
Meanwhile, after the bell tomorrow, we get Spotify, which is up 56% year to date. Ryan Vlaselica, we have you across all the earnings. Thank you so much for breaking it down. Meanwhile, that does it for this edition of Bloomberg Tech Ed.
Yeah, I feel like there's a lot of tension in the week. Like, we've really set it up to be huge. Recap some of that hype, maybe some of that excitement for the week to come on the podcast. You know where to find it on all the platforms. It's everywhere. But I don't know, that's just how it feels. It feels like everything's a little bit tense.
Macro, micro, earnings, got a little bit of tariff anxiety coming into August the 1st. There's plenty to digest. Stick with us for the week. This is Bloomberg Tech.